Hello, my name is Dennis, and I invite you to the amazing world of futures and options on futures. All you need to know about trading futures and options you will find in this course absolutely free. You may ask, why trade futures? What are the advantages of futures against the stocks? Well, I will show you the answer. Stocks are trading on the New York Stock Exchange only 6.5 hours per day, from 9:30 a.m. until 4 p.m. On the other hand, futures are trading on Chicago Mercantile Exchange, or the CME, almost around the clock. So you can make profits even during Asian or European sessions when America sleeps. But your money never sleeps, and your money should not sleep either. Let's see the chart of the most known financial instrument, the S&P 500 Index. Okay, imagine that an S&P 500 index is now 2,000 points, and you suggest it will rise up to 2,100 points. How can you play it with stocks? You can buy shares of exchange-traded fund or ETF on this index. It has the ticker SPY. The price of SPY has 1/10 of the S&P 500 index. So, when index has a value of 2,000 points, SPY has a price of about 200 points. Like in any stock, 1 point of ETF costs $1. Well, let's say you buy 100 shares of SPY at 200. So, you pay 100 times $200, which equals $20,000. Then, you wait until the S&P 500 index will rise to 2,100 points, and SPY will rise to 210 points. After that, you close your position, sell your 100 shares of SPY, and receive 100 times $210, which equals $21,000. Your profit is $21,000 minus $20,000, which equals $1,000. Your return on investment, or ROI, is $1,000 to $20,000, equaling 5%. That's a good result. But now, let's see to the futures. There is a futures contract on the S&P 500 index. Its ticker is ES. To open a position in futures contract, you have to hold in your account some amount called margin requirement. This amount varies for different futures and frozen in your account until you close your position. For ES futures, the margin requirement is $5,000 per contract. In ES futures, 1 point of index costs $50. So, if you buy futures contracts at 2,000 points and then sell it at 2,100 points, you receive a profit of 100 points, or 100 times 50, equaling $5,000. Your return on investment is profit divided by margin requirements, or $5,000 divided by $5,000, equaling 100%. You can double your investment in futures at the same time when stocks give you only 5% profit. Is it black magic? No. It is how futures work. But that's not all. Besides futures, there are options on futures. They can give you much more profit much faster. Are you interested? Enroll in my course, and I will show you how deep the rabbit hole goes. Welcome to the wonderland of futures and options.